Today, we are going to take a close look at what happened post the FOMC meeting, what we see in the charts, and how to prepare for further FOMC news events. In the last video, we mentioned that price would likely flush and liquidate the longs that were seen on the liquidation heat map. This would push ETH to under $3,900. We also mentioned that the bottom of the purple band was about $3,700. As long as ETH held the purple band, ETH was still overall very bullish. This band has held since the end of September. We also mentioned that the point of control had shifted upward to the middle node, or what we had originally marked as the bottom blue band. Price was resonating around this blue band before the meeting. This told us that this area was going to be a key price point for further price movements. Our blue band would either be support or resistance. Looking at the 15-minute candles, the point of control from the 4-hour chart is marked in orange. A green zone is also in this exact area, followed by a creation of a red zone that overlapped it. This is common when the market stalls due to indecision on which way the market will break. Prior to the FOMC, the green zone was broken. The red zone held after the announcement of the rate cut, and it wasn't until Powell started speaking that a sell-off occurred. After the speech and throughout the next business day, ETH was bearish and only created new red zones. There are a lot of trades that can be devised from these zones. For instance, when the stochastic RSI is overbought, but still in the red zone, a tight stop can be placed above the zone for targets below. Thursday's price action was more severe with a steep sell-off. This increased sell-off is usually the last part of a strong move, similar to a blow-off top. When we include our parallel channel markers, shown in light blue, we can see that it clearly marked the very bottom. There were also some other strong indicator singles at this bottom as well. This is not covered in the video. So a bit of a recap, we identified a blue band area that was a major support or resistance area. From long ago, we identified our purple bands on the daily chart, which would be heavy support down to $3,700. We then saw the green and red zones on the 15-minute, which provided both triggers and places for our stops. Creation of red zones and them not breaking allowed us to follow price action all the way to the bottom of the purple zone. The channel was a perfect place to take targets at the bottom of the move. Since the bottom of the move, 2 red zones have been broken, and a green zone has been created. There is a double top, and the break of the green zone will most likely signal a retest of the bottom. If the green zone holds, then the point of control from the 4-hour most likely will act like a magnet. On Sunday, we will take yet another fresh look at the charts to see what is in store for the coming week.